Let's bring in Manisha, who's joining in. We are focusing on what's happening to the commodity and currency space. Manisha, good morning.
Morning, Prashant. Thank you so much for that. And before we go to that crude story, remember those flashes that we were just addressing on the Finance Ministry and the Commerce Ministry as well, talking about a gold policy. Remember, it was mentioned in the budget last year and it has been under conversation. There, of course, have been lots of nitty-gritties and points to tackle on here in sense of the global gold prices, how India reacts to that. There also has been that conversation about a bullion bank and also how a comprehensive gold policy is the need of the hour in the Indian markets here, and also to bring the domestic and the foreign trade rules under the same umbrella. Apart from that, the gold board will also oversee the gold and the jewelry sector. So those talks have been on time and again. How soon do we see that policy and the bank and the regulator is something that still is not very clear coming in from the ministry. But another thing that, of course, has been buzzing has been the crude oil prices, up nearly 10% in last 2 weeks. Today, of course, we've seen a bit of a decline come in, but that's quite a given with the kind of run-up that we have seen. It is on May 25th that there is the Vienna meeting between the OPEC and the non-OPEC producers, and the markets really seem to be factoring a lot as of now. Peter McGuire then joins us to talk exactly about that. Peter, hi. You are headed to Vienna. You are in Mumbai today, but markets pretty much preempting a lot on what could really go on May 25th. What is your sense? Is an extension of a rate cut really, output cut really a given?
Well, I think the overall momentum moving forward is going to be one of the Saudis are mentioning that 9-month extension. There are a great number of players I think will follow through, and the pathway's already been laid. Overall, there is still too much supply out there. We've got to try and trim numbers, and the only way forward is, for a number of angles, to extend those cuts for a further 9 months. Working back to what we discussed in November of 2016, this next meeting in 2 days' time is just that natural extension, which takes on board a 15-month cut. So there is more momentum. I think it will be glued together by the greater majority of players, and I think it should be quite an exciting meeting.
Well, I hope you enjoy that. But even with a 1.8 million barrels per day of a cut, do you think if an extension is until March 2018, that would in some sense take off the excess global supply that we stand on right now?
Well, I think to some extent it will, but the other side, of course, is what happens as far as drill, baby, drill. US rig counts are climbing each week. Baker Hughes, I look at the numbers, and when you're thinking about what's going on from a supply side in the US, there's every chance forward that by 2019 they could be the #1 producer in the world, or very close to it. It seems to be a tie at the moment with Russia and Saudis and, of course, with the US. So I think it's going to be a very interesting move forward. Then you're looking at, driverless vehicles and new age technologies and electric vehicles, whether they'll strip out some of that demand side. So it's quite a fascinating time for the oil industry.
Peter, also the prices already have run up ahead of the meeting, 10% up in a fortnight. So whether we go exactly as per the textbook that the markets are anticipating in Vienna or we don't, what is the reaction that you see in prices?
I think where WTI sits at the moment, you also take on board that the US dollar has taken a fairly heavy hit to the downside over the last few trading sessions, or the last week and a bit. They're probably strengthened from here, the WTI and Brent prices leading up into Thursday, probably a little bit further upside. They'll consolidate. Let's see what happens as far as the meeting, and I wouldn't be surprised to maybe up $1, up $1.50. What we're trying to suggest, sometime next week you could see a little bit of a pushback, a little bit of a correction. It's had a big run-up, and these markets, when they have big run-ups, traditionally take a couple of days out to simmer things down and take the heat out of it.
Well, that's the expectation of a broader market as well, that we might see some more profit taking post 25th. But Peter, you mentioned about the renewable energies and the electric cars and stuff coming into the market. That's exactly what the Indian Petroleum Minister as well spoke about yesterday, on how the OPEC cuts are impacting Asian buying and how India perhaps is considering suppliers from US and Canada, etc. Do you see more Asian consumers actually go that way?
Well, exactly. I mean, they'll look at US oil, they'll look at other producers outside of OPEC and naturally Canada. the world is a changing place, and thinking as far as production, OPEC still produces, you know, the best part of 30-odd million barrels a day, but there are major other producers out there, and with new supply coming online, I think it's, in some ways, it's a buyer's market, not traditionally a seller's market. So the context, quite simply, is whilst supply is an interesting, you know, machination, the other side, of course, is wherever you can strike out the best deal could be, you know, externally to OPEC and of course to Russia. So I think India is going to, like many other Asian countries across that Asia basin, they'll look for, you know, better supply.
Well, totally that, Peter. We hope you have a good meeting in Vienna on 25th of May. That is where the 13 OPEC members and 11 non-OPEC members as well are meeting to talk about on extension and output cuts. And that clearly has been keeping the crude oil prices on the higher side.
Manisha, thank you very much. Peter, thanks very much for joining us with that interesting conversation.